Alright, today is a Sunday. Let me give you some tips or chart reading tips for the Heikin Ashi candlesticks. So let's begin. Now, okay, I'm currently on the 1 hour chart. Today is Sunday. Let me switch to the 5 minute chart. Although the spread may be larger, let me use that word, being that today is Sunday and there's currently the volume is low. You can't compare the volume on Sundays to other days. So I'll switch to the 5 minute chart because ordinarily that's what I trade. The 5 minute chart. Not because it's the best time frame to trade. Like I said, there's never a best time frame. It's just the one that is fine for my type, for my person. So that's that. Now I am on the 5 minute chart. And if you can see, let me tell you how to identify a trend. Whenever you see series of same color candles, for example, my chart is painted, my bullish candles are in white color. So whenever I see series of white colors like this, your chart can be distinct, but just take the idea that this is a bullish candle. You know that that's a trend. Now, one of the ways of distinguishing bullish candles from bearish candles in the Heikin Ashi is for you to look at the coloring is there, but apart from that, there's something apart from coloring. Usually for bullish candles, you see that there's always a tail at the top. Bullish candles always have a tail at the top. And if the candle is very bullish, you will likely not see a tail at the bottom. You will likely not see a tail at the bottom. But by default, there's always a tail at the top. By default, every bullish candle has a tail at the top. But if the candle is very bullish, for example, the candle is very bullish, you will likely not see a tail. Now I'm going to show you. This candle here, you see, there's no tail. Sorry, there's no tail. You can see there's no tail. Even for this one, no tail, no tail. But if you look at this candle here, this one, this bullish candle here, you can see that there's a tail, and that's the tail. Also, let's look at the bearish candles. For the bearish candles, you always see that by default there's always a tail at the bottom. So it's like an inverse. It's like you taking a bullish candle and inverting it. You always see a tail at the bottom. So for example, these are series of bearish candles here. You can see these are series of bearish candles. There's always this thing, the tail. If the candle is very bearish, you won't see any tail at the top. You won't see any tail at the top. There will be no tail at the top. But when you see a tail at the top in a bearish candle, it shows that buyers are tempted to push price up, but yet it's still closed bearish. The candle was still bearish. The color was red. That itself is a very good sign, because in a situation where for a bearish candle there was an attempt to go up, there's a tail, it created a tail up, then later returned back. It shows that selling pressure was high. If you see something like that, depending on context and your strategy, for my own strategy, if I see something like that and depending on context, I'm selling, because if I'm already selling, I'll add to my position. That's a very critical indicator that there was an attempt by buyers, but sellers pushed it down. So that's for that. So that's for bearish and bullish candles. Now, like I told you before, if you see series of same color candles, you know that there's a trend. For example, this was on 13th of September. I think this was on Saturday, yesterday. If you look at from this place, from this 17 10 minutes, that's 17:10, that's 10 minutes past 17. You see that there were a series of red candles. This was a large trend. Imagine you caught a move from this candle here, yeah, that candle there, that's 17:05, all the way to this place. That was going to give you a huge amount of money. Or you catch a move from this, for this bullish candle, from this 18:15 all the way to 21:15. That's like that's like 4 hours span. You bought here and you sat on your hand, and the market moved all the way to this place. You are going to make a huge amount of money just for you to determine a strategy that you use in trading the market. And many times when there's a bullish candle, for example, in my own chart, I've colored my bullish candles to be white. When there's a bullish candle, the first white, you can for Heikin Ashi candlesticks, many times you can even predict, once you see the first bullish candle after a series of red, that the subsequent candles will be white, white, white. So for example, you see a white candle or a green candle depending on your chart, or let me just say the first bullish candle after a series of red, you can decide to buy. It doesn't work every time, nothing works all the time. You can decide to buy, knowing by your prior knowledge that like in Ashi candlesticks usually move in series of color, in the sense that once you have one bullish candle, the next candles, for example, if it's white, this next 5 or 6 candles can be white, 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 or bullish, because by itself it filters out, it tends to show you the trend, it filters them out. So that's an instance of this you spotting trend. Then how do you spot reversals? Let me talk about reversals. Well, one method for spotting reversals, for example, let's take a look at this. Although these things you still have to backtest it by your own. The more you spend time on the chart, the more you know what works, and the more you start spotting patterns. For example, you see this series of red candles here all the way to this place. When you start seeing higher lows, by higher lows, I told you prior that every bearish candle by default has a tail, or has a tail. Every bearish candle has a tail. Now, if you look at this tail is lower than this other candle's tail. This other candle's tail. See, this is a tail for this candle. 1740 is lower than this, which means the candle that came after it has a higher tail. If you see something like that, you should start preparing for a trend reversal. A trend reversal is imminent. Particularly when you see something like that, you see a candle that has a lower tail, then the next candle has a higher low. Then subsequent candles came down to make lower lows than that, and then there's a change of color. You can tell that the trend is weak or the trend is about to reverse. That's a very good indication, and you will see it in many places in the chart. Look at it. Here's an example. If this for bullish candle, this was a higher high. The tail was higher, the higher high, and this is a lower high. You can tell. See, higher high. This is the high here, and this is the lower high. So that's for that. You can use it to spot reversals. Then swing trading, there's nothing really particular about swing trading. The difference between if you are swing trading or you are day trading is just your time frame. It's still the same thing. Time frames or charts are fractals, in the sense that the same patterns or the same occurrence on the 1 minute chart repeat itself on the 5 minute chart, repeat itself on the 10 minute chart, repeat itself on the 20 minute chart, repeat itself on the 1 hour chart. It's just the same thing. The only difference is that it takes more time for it to form on the higher time frame than it takes for it to form on the lower time frame. But time frames are fractals. It's the same occurrence. That's why if you can trade 1 minute, you can trade 1 hour or 4 hours. It's all about you just knowing a pattern. Trading is all about pattern. There is a popular quote by a legendary trader. I think her name is, the person is a female. Her name is Linda Raskill. She made mention that you just need one pattern to make a living for the market from the market, and that's true actually. You just need to look at the chart, backtest. Although backtest has a fallacy in it, but at least it's better than guessing. Look at the chart, deviate one pattern or two patterns that you use for your entry into the market. That you use for when you see that pattern, you know you're going to enter the market. Then you pick your time frame depending on if you are the kind of person who can sit for 1 hour. Maybe if you have just 1 hour as a spare time in your day, you can decide to trade the 1 minute chart. But although I won't advise that, trade the minimum of the 5 minute chart. So you have like 1 hour in a day. You can sit in front of your laptop or your tablet. You're on the 5 minute chart, waiting patiently for your pattern to show. When your pattern shows, you sell or you buy. So that's that. Then support and resistance. Yes, if I were using a larger screen, you'd have seen. But for example, this is support. This is support here. Let me write it out. Let me spell it out for you. This is support. See, that's a support. You see there. If you open the chart, there you can also use Heikin. You can spot support and resistance on Heikin Ashi candlestick. It's still the same thing. There's no distinction. For example, this is a resistance here. You can see that's a resistance. So you can even do trend line on it. This is a trend line. This is a trend line. When you open your chart, you're going to see a lot of these things, but I'm just spotting it out for you in this tutorial. So that's for that. Like I said, the spread is larger here because today is a Sunday, and of course the market volume is thin. Then you can combine your Heikin Ashi candlesticks with indicators. For example, the Bollinger Band indicator. Here's the Bollinger Band indicator. I've applied it. You can see it. It's now applied to my chart. Here's the Bollinger Band indicator. You see, in fact, the Bollinger Band is getting tight here on the 5 minute chart on Bitcoin. Look at it, it's getting tight. This is a positive sign that a big move is about to come. Yeah, for those who notice Bollinger Band, this is a big sign that a big move is about to come. So you can use any indicator, and if you use the XNES app like I do, I love XNES. You can find your indicator here. Let me spot it out for you. Look at it here, indicators. If you click on it, you see that your indicators, you see a lot of indicators there. You can see a lot of indicators that you can use. If you don't need more, you just need one or two indicators. And none of these things make you profitable. They can make you profitable, they can make you not profitable, they can make you unprofitable. It depends on how you use it. That's why it's advisable to use price action alongside indicators. Indicators are just there to like give you context. Context is very important because I believe, for me personally, I believe in trading. Context is almost everything. So that's that. You can use it with indicators and you can use it on any time frame. So I'm going to be ending this video now. Happy Sunday and enjoy. I hope you have a blissful trading week.